That's to say you can use the equity method, yeah, but not the proportional consolidation. Now, biological assets in Singapore, hardly come across because we don't have that many agricultural companies, but we do have Indonesian plantation or Malaysian plantation listed in Singapore. So under the China ASB number 5, biological assets should be measured using the cost model unless there is evidence of reliable fair value. In fact, if you look at PRC accounts, I think most of the agriculturals, what I call the assets, are measured using cost model. Yeah? But for FRS 41 that we have adopted, it requires to fair value the biological assets, yeah? Unless it is clearly unreliable. Yeah? Now about presentation of expenses. The ASB requires expenses to be presented by function in the statement of income, but SRS 1 also allowed presentation of expenses by nature besides by function. So this one quite straightforward. What about presentation currencies? The SFRS 21 allows an entity to present its financial statements in any currency. It can be US dollars, renminbi, Sing dollars, Hong Kong dollars, Japanese yen. But the ASB allows only renminbi. Yeah? In fact, you remember the old Singapore Schedule 9 actually allows us only preparing Singapore financial statement in Singapore currency. But that was changed subsequently when we adopted the FRS. Now, on presentation of consolidated financial statements, I think Mr. Chen did cover this. The SRF 27 allows a parent not to present consolidated financial statements under certain conditions, like for instance, the company is a wholly owned subsidiary of another company, or is virtually wholly owned, and your non-controlling interests also agree to non-presentation of consolidated financial statements. Whereas for ASB 33, they requires consolidated financial statement to be presented. There's no exemption, so to say. So in fact, I observed that some Singapore bigger company, like some of the LISCO, they already begin to have holding company in China. And for those holding company, even though it's 100% owned by Singapore, they will still be required to prepare their consolidated financial statements, their group accounts. What about cash flow? Under ASB 31, direct method is used in reporting cash flow from operating activities, accompanied by a note showing reconciliation of profit and loss to net cash flow from operating activities. Now, so in China, actually, you need to show both direct and indirect method. Yeah. Whereas for SRS 7, we allow a choice of either direct or indirect method. But again, to share with you, there's a discussion paper published by IASB on the preliminary view on financial statement presentation that was published in October 2008. It suggested that in the discussion paper that an entity should present all its cash flow directly, including its operating cash flow. This means that an entity should use a direct method of presenting its cash receipt and cash payment during the period, but not the indirect method. So I think eventually the IFRS is once become a standard from what's suggested by the discussion paper, will be also using the direct method. Whereas in Singapore, commonly used now is actually indirect method, that you start from your profit or loss before tax, right? Now for asset related government grants, ASB 16 requires such grants to be accounted as deferred income and charged to profit and loss over the useful life of the assets. In addition, certain grants are categorized as investment subsidies and are required to be credited to equity. So the investment subsidies are, in Chinese, they call 投资补助. Meaning, let's say in China, the local government encourage you to invest there, and they promise to give you certain investment subsidiaries in the form of refund of part of the land costs or things like that. Then that under the ASB 16 will have to go to equity. Whereas in Singapore, actually, that become an income, right? Now, for SRS 20, it allows government grants to be deferred and charged over the useful lives and assets rated government grants to be deducted from the carrying value of the assets. So these are the treatments for asset-related government grants. In fact, in China, I think as our speaker said it just now, government grants is very common. Yeah. In fact, that's one topic that US always protests. Yeah. Now, for retirement plan, SRS 26 prescribed the accounting and reporting of defined contribution, defined benefits plans, whereas ASB only address defined contribution plans. Yeah, so there's a slight difference here. And for interim financial reporting, ASB 32 does not require a statement of changes in equity to be presented, which is required by SRS 34. And for condensed interim financial statements, allowed under SRS but not under ASB. So again, this is a slight difference. Yeah. What about business combination under common control? In fact, we come across this very often is when a company or group of companies want to go public. Before they go public, usually they are owned individually by maybe the same owners or same group shareholders. So come to business combinations, in China they have similar situation. So for ASB, it prescribed the pooling of interest method. That means if you look at their standard, actually they group into broadly two categories. Combination under common control and combination not under common control. So for those under common control, you have to use pooling of interest method. But this is not addressed in our FRS 103. So when a company in Singapore go public, those of you have been doing the LISCO, what I call the reporting accountants, you realize actually we have to fall back on the RAP 12, right? RAP 12 is actually dealing with merger accounting for common control combinations for financial statement prepared under Part 9 of the 5th schedule to the Securities and Futures Regulation. And then we also, with common control, very often we also use the pooling of interest method. Yeah. Now, what about safety fund? Now, certain industry in China, like the mining industry, they need to set aside a safety fund reserve according to industry regulations. So the fund is expensed and credited to equity by creating a special reserve. The fund is debited when qualified expenditure is incurred. Under SFRS, recognition of expenses occurs when there is an increase in liability or decrease in assets. Yeah? So that is something unique to China because mining in China is very common. Yeah? So for ease of consolidation for foreign investment enterprises may consider adopting the new ASB. But as explained by Mr. Chen, in fact, most FIEs are actually still using the old GAAP. Yeah? So quite often you come to, I think most LISCO what they arrange is that for the audit of their China subsidiary, they will have the auditors to publish two set of financial statements. One is using FRS, one is using the China GAAP. So China GAAP is for submission to the local tax authority, whilst the SFRS compliance for our consolidation purpose. Yeah. So for any company, I think as what Mr. Cheng suggests is that if you do need to reconcile, it's always good to identify those areas where there are differences, and then become a standing what I call the accounting adjustment entries that you need to do whenever you close your accounts and before you consolidate. Yeah. Again, it's only a matter of time before it becomes mandatory for all enterprises in China to adopt one set of accounting standards. So as Mr. Cheng explained, the accounting standards in China is also undergoing a major revamp now. If by end of next year, if this is completed, I think most likely they will push most of the company other than small enterprises, 小企业, most of the companies will have to go into the new GAAP, which is very much IFRS, what I call compliance, or it's a almost full conversion, yeah, with IFRS. So I think with that, this is really a very quick